Okay, cool. All right, thanks everyone. Appreciate you joining us today. That for those that you don't, or for those of you who don't know me, I'm Aaron. I'm the Senior Community Engagement Officer here at SA Portable Long Service Leave. And to my right is Mandy. Firstly, I just want to acknowledge the traditional custodians of the country through Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. As I said, I'm joined by Mandy, who's our operations manager, and I like to call her our subject matter expert regarding everything that the scheme has to do. So you'll quite often see us out and about together because she knows a lot more than I do, which is awesome. I just want to make sure that you're all aware that we are recording today's session. And then at some point in time, very soon after, we'll make it available online as we did with the first webinar, especially for those people that couldn't join us today. Today, firstly, I'd like to welcome those who haven't attended a session with us as yet, or we haven't met with directly. As most of you would know, we held our first webinar on the 1st of May, which essentially was an introduction to the scheme. We had a lot of questions leading up to that session, which we attempted to respond to during the webinar. But we also received a lot of questions during the session that we didn't get to. And whilst we did respond to those questions from those individual organisations directly, we thought it was actually relevant that we spoke about them and shared them with you in today's webinar. I guess more broadly, so you all understand some of the questions others are asking, but also get the answer, I guess, that everyone else had. We'll give you a very brief update on the regulations.
Have you seen my payroll tax email?
And we'll make it clear about what's coming next. But today, the majority is about sharing some Q&A that we received on the 1st of May and I guess since then as well. And after getting through all of that,
just ask people
we'll
to mute?
hopefully have some more time to
every month, except for May.
Answer some of your questions that you might want to ask us throughout today's session.
Because we hadn't hit
so just chuck them in the chat. Mandy's there. She's going to keep an eye on it for us, which is awesome.
Got a 2 point.
And at the end of the session, we'll publish an article on our website. I guess just recapping on what we spoke about today.
No, so once you hit 1.5, then there's a sliding scale until you hit 1.7.
So just a quick recap on what portable long service leave is, especially for those new people attending today and why it's been introduced for the community services sector. As we know, traditionally, long service leave was only available if you stayed with the same employer for 10 or more years. We are aware, however, that in community services, people often move between organisations even when doing the same type of work. That meant a lot of people never got access to long service leave despite their years of contribution. That's where portable long service leave comes in. It recognises the nature of the sector as funding often comes from government grants or donations. Contracts come and go and people move between employers regularly based on funding cycles. The state government saw how well this worked in the construction industry and partnered with employers and unions to develop a model tailored for the community services sector. So quickly talk about eligibility. I'll ask Mandy to provide you with all, I guess, a bit of an update. Sorry, again, the gremlins are hitting us. Mandy's going to give you a bit of an update on, I guess, what we've learned over the last couple of weeks around eligibility, and I'll hand it over to her.
Thanks, Aaron. So eligibility under our Act is based on two things. It's people who are providing community services and people who are supporting the delivery of community services. So people who are providing community services need to be covered by the SHADS award or the ALRM award. You don't have to pay them under that award. They could be under an agreement that's underpinned by that award, but they do need to be under that award. And they need to be delivering a service that's listed in Schedule 2 of the Act. So in Schedule 2, there's a list of, I think, 30 different services. So it needs to be one of those as well. People who are supporting the delivery of community services are essentially supporting those people who are actually delivering the services themselves. Those people who are supporting the delivery of services do not need to be covered under any particular award. They could be covered under any award in any role, as long as the role that they're doing is directly supporting the people who are providing the services. I think that pretty much sums it up.
Excellent. All right. So there's a little bit of a shift in, I guess, some of the things that we've been talking around eligibility with a lot of you recently. Some advice that we've received directly pushes us towards, I guess, those two criteria around being on the SHADS or the ALRM or supporting those workers on those two awards. If anyone's got any questions about that, let us know. We might not have come back to you since we had that update, and it's a little bit more clearer for us all now. So reach out to us maybe after the webinar and we can have a chat to you then. Regulations. I know we all want to know where they're at. Right now, we are where we were last week. The latest information we have remains the same. The Safe Work SA team and the state government are working to finalise those regulations. And that's important because, and I'll explain later why, but that's important because they determine the remuneration calculations required for each employer to pay for each employee. Once the regulations are finalised, they'll go to Cabinet for approval and we'll all be notified when they're officially gazetted through the Government Gazette. Fingers crossed, it's going to be very soon. In the meantime, we'll continue preparations to make sure workers and employers are well supported and ready for the scheme's commencement on the 1st of October. All right, now that we've gone back over some key parts of the scheme, we'll take a quick moment to go through some of the questions from our 1st of May session that we didn't get to with the whole group. We had a great turnout on the day. I think we had about 130, 140 people log on. We received way more questions that we had time to get to. So today we've pulled together some of those questions and we'll walk you through those answers now. As always, if you've got something specific on your mind after this session, feel free to reach out. We'll be happy to talk to you directly. Okay. So this is a really common question we've been getting. Is the scheme compulsory? The answer is yes. If you employ eligible workers, then you're required to take part in the scheme. This is set out in the Portable Long Service Leave Act, so it's not optional, but we're here to make it straightforward and support you the whole way through. All right, so this was another one of our common questions around remuneration. And at the moment, as you can appreciate, the definition of remuneration, which determines what the 2.2% levy is applied to, is still being finalised by the regulations. Because that process is managed by Safe Work SA, the regulations haven't been confirmed yet. We're not able to give you a final answer right now, unfortunately. And I know we're all a bit frustrated, or we're waiting for those answers, especially for those of you managing tight budgets at this time of year. But, you know, rest assured we'll share clear guidance as soon as we're able to. There's no one watching it closer than us. So we'll update you as soon as they're finalised. What we can suggest is, whilst we're waiting, is you can undertake some forecasting, I guess, based on what was in the draft regulations. It might not end up being the exact figure, but at least it'll give you an idea of what it might look like. This is a great question that we got. What about staff who support community services but don't deliver them directly? And I know Mandy just touched on this a few minutes ago. And the short answer is yes, they're included. If your employee is not providing community services but performs a role that supports the provision of community services for at least half of their time, they are also eligible for portable long service leave. Their roles like HR, payroll, finance, admin, any of those eligible workers who are supporting the provision of community services could also be covered under another award, like Mandy said. So if you've got any questions about that, like I said, just come back to us after the session.
The idea behind that one was that if you have a business that delivers community services as your primary role, then you would be able to register everyone in the organisation, making it easier for you to manage your long service leave obligations rather than having to try and manage across two different legislations.
Thanks, Mandy. We've been asked a few times, will we get a demo of the portal? And the answer to that is absolutely yes. We'll be sharing step-by-step information about how to use both the employer and the worker portals in the lead up to the scheme start. That includes a dedicated webinar we'll hold that'll walk you through how it works, guides and checklists, like a toolkit that will make available for you to download. And we'll be providing you with plenty of reminders of what you need to do and when. Like I said earlier, our goal is to make this process as simple and as clear as possible for you. So we want you to feel confident when it's time to register and start reporting. You'll know exactly what you need to do. We often get asked, what happens to existing long service leave when the new scheme starts? Does it get rolled in? I guess that's the terminology that we were provided or asked. The short answer is it's no, an existing long service leave entitlement doesn't get ported into the new scheme, but it is recognised and managed alongside it. Really important info. If you have workers who started with you before the 1st of October 2025, before the scheme starts, this is how it works. If a worker has already reached 7 or more years of service by the time the scheme starts, they're already entitled under the State Act. From the 1st of October onwards, if they make a claim, the scheme will pay them and then recover that pre-scheme portion from you, from the employer. The second part is if the worker hasn't yet hit the 7-year milestone by the 1st of October, but reaches it after the registration process with portable long service leave, you'll still be responsible for the part of their leave earned before the scheme began. That portion will be calculated at the time of claim, and the key bits of information for those calculations, surprisingly, are in the regulations. So more to come about that one. The third important part of this is if the worker leaves employment or your employment before reaching the 7-year milestone, you are not responsible for paying long service leave for that worker. Pre-scheme service doesn't carry a liability unless they reach the 7-year entitlement threshold. That's a really important point to make. So we'll make that very clear on our website, and if anyone wants any clarification on that, feel free to reach out. So I guess the takeaway for that is the scheme doesn't wipe the slate clean. It respects what's already been earned and clearly splits the responsibility. Another common question we're getting is who actually pays the long service leave and what happens to the provisions we've already put aside. Workers will submit their long service leave claims through the Portable Long Service Leave Worker Portal. As the employer, you'll need to approve that claim before any payment is made. We've said this a few times to a few people that we've met along the way is, as the employer, we strongly encourage workers and the employers to have a conversation so there are no surprises when a claim comes through. Once a claim is approved by you, the scheme will pay the worker directly. Then the scheme will seek reimbursement from the employer for any service accrued under the State Act prior to the 1st of October. So those provisions you've already set aside for pre-scheme leave stay with you, and you'll draw on them if and when a claim is made that includes that earlier service. This question came through from a provider delivering aged care. We have registered nurses working under the Nurses Award. Are they eligible for portable long service leave? The answer is no, they're not. Under the current scheme, nurses and other registered health professionals, such as chiropractors, podiatrists and pharmacists, are not eligible for portable long service leave. The scheme is focused on workers whose roles sit under the SHADS or the ALRM awards, as Mandy alluded to earlier, and who are delivering community services as defined in the legislation. If you're unsure about specific roles or mixed duties, I guess is one thing that we're hearing from. We're always happy to talk you through it when we finish up, and we can have a chat to you over the next couple of weeks. This one's for the finance and the payroll teams. What happens with salary sacrifice when a worker takes long service leave through the scheme? The Portable Long Service Leave Act does allow for salary sacrifice arrangements to continue between the worker and the employer. So this is how it works. When a worker makes a claim and is approved, the amount to be salary sacrificed is deducted from the total payment. That portion is then paid to the employer, who processes it like they would normally do. The rest of the leave payment is made directly to the worker. So yes, salary sacrifice can still apply. This question is about worker registration. What kind of information will employers need to provide? And again, we'll have more and more information about this on employer toolkit information sheets very soon. But the answer to this question is the process is designed to be as simple and straightforward as possible. You'll need to provide some basic details for each eligible worker, and they include things like their full name, their date of birth, a mobile phone number, an email address, and a postal address, and their employment start date. We're not going to ask you for things like their tax file number or their bank details when registering. We'll also provide a series of information sheets, again, as part of an employer toolkit ahead of the scheme start. That'll have clear steps and tips to help you get ready and collect what you need. This is a really common question. Do we have to enter each worker one by one, or can we upload them in bulk? The good news is you don't have to do it one by one. When the employer portal goes live, you'll be able to bulk upload your workers using a spreadsheet template that we'll provide you. That same upload method will also be available when it comes to time to lodge your quarterly returns. We'll make sure there are clear step-by-step instructions available to download from our website, so you're supported the whole way through.
I'm just going to interrupt for a moment.
Please.
I can see all your questions coming through, and that's great. I'm actually going to leave them until the end before we address them, because some of them will be addressed through the rest of the webinar questions that we already have. So rather than sort of double up on them, I'm going to leave it till the end, and then we'll go back over them. Okay, but please keep sending them through so we're all ready for the end of the session.
Excellent. Thanks, Mandy. This next question is a really interesting one. If someone is on unpaid parental leave but works just one day in the quarter, do they still accrue long service leave? That could be an example, like someone asked us around a stay in touch day that someone might be coming in for as part of their unpaid leave period? And the answer to that question is yes. If a worker works one or more of those days in a quarter, then they're credited with that service. The scheme covers employees who work for one or more shifts in a quarter. Doesn't matter what that is, as long as it's one or more shifts in that quarter, delivering community services or supporting the delivery of the community services. So there's something to keep in mind though, however, if their overall workload is reduced in that quarter, for example, due to returning part-time or on reduced hours, this could affect their weekly rate of pay when they eventually claim their long service leave. So yes, service accrues, but the value of the payment later will reflect the average worked hours and earnings. This one's about eligibility again. Does a worker need to meet both criteria or just the one? No, a worker only needs to meet one of the two criteria. Again, if they're providing community services, they must be in a role covered by the SHADS or the ALRM award and delivering a service listed in that Schedule 2 of the Act. If they are supporting the provision of community services, their role must involve directly supporting those delivering those services. For example, again, HR, finance, admin. It doesn't really matter what award that they are covered under, as Mandy alluded to before. The important thing is to know it's not about how someone is paid, it's about the type of work that they're doing. This one's about what happens when a worker leaves the sector. If they've reached 7 years of service and exit community services, can they still get paid their long service leave? And yes, they can. If a worker has accrued 7 or more years of service and then leaves the sector with no intention of returning within the next 12 months, they can claim a pro rata payment. They don't need to wait. They can submit their claim immediately after leaving, as long as they're not planning to start another job within the sector. This recognises long service even when someone finishes up, and it's one of the ways schemes brings fairness to more workers in our industry. This question is about employment services. Are workers who are covered by the Labour Market Assistance Industry Award eligible for the scheme? And the answer to that one is no, not under that award. If a worker is providing employment services and is covered by the Labour Market Assistance Industry Award, they are not required to be registered with SA Portable Long Service Leave, even if they aren't being paid the award rate. However, there's an important exception. If a worker is delivering employment services within a community services organisation and is instead covered by the SHADS award, then yes, they are eligible for portable long service leave. So again, it comes down to two things: the type of work they're doing and the applicable award. This one's a nice and simple one. Does the scheme include casual staff? Yes, it does. Casual workers who are employed in the community service sector and working in eligible roles are entitled to portable long service leave under the scheme. It doesn't matter if someone's full-time, part-time or casual. If they've met the eligibility criteria, they're in. This is a great question about visibility. How will we, as the employer, know how much long service leave an employee has already accrued with other employers? Once the scheme is up and running, you'll be able to see the total portable leave balance your employee has accrued, all through the employer portal. For privacy reasons, you won't see any details where that service was earned. That means you won't have access to names of previous employers. You won't have access to employment dates or previous rates of pay. You'll just see the overall balance. and you'll be able to report your portion of service from there. This one is about long service leave that's cashed out before the scheme. Before the scheme begins, sorry. If an employee and employer agree to cash out leave now, how is that recorded when the scheme starts? And it's a good question. And here's how it works. Employers will be required to provide details of any existing long service leave entitlements a worker has, including how much service has accrued and any leave that's already been taken or cashed out. As I said earlier, there's going to be more guidance available, especially on this one, including exactly what type of information we need from you that we'll ask you to submit and how you'll submit it. So overall, yes, you can cash out leave under an agreement before the scheme starts, but you'll still need to report it once the registration opens. I know this slide or this question is the same topic as that previous slide, but I thought it was important to acknowledge and answer it due to its, I guess, slight difference. The answer to this one is, can a worker cash out payable long service leave, and what happens when staff leave the sector? So the answer to this question is yes to both. There are options available. A worker can apply to cash out their long service leave entitlement instead of taking time off. Just like normal leave, like a normal leave claim, the employer needs to approve it through the employer portal before any payment is made. If a worker has accrued at least 7 years of service and then leaves the sector entirely, they can apply for a pro rata payment as long as they don't intend to return within the next 12 months. So I guess the scheme supports both leave and cash out options, giving workers that flexibility depending on their circumstances. This question is about how pre-scheme liabilities will be handled. Will the long service leave amount we owe for pre-1 October service stay fixed, or will it be recalculated at future pay rates? It's a really good question, and here's what we can tell you right now. Some of the finer details about how leave entitlements are calculated, especially for workers who reach entitlement after the scheme starts, are still being worked through in the regulations. So we can't give you full advice on those situations just yet, but for workers who have already reached 7 or more years of service before the 1st of October, your liability as the employer will be fixed. That means the dollar amount owing is locked in at the rate as of the day before the 1st of October. So even if their pay rate increases later, your obligation for that pre-scheme service won't change. This one's about interstate staff. Do we need to register workers who live and work in other states like Victoria, New South Wales or Western Australia? If a worker performs work in South Australia, they're covered by the Portable Long Service Leave Act, regardless of where they live. They don't have to reside in SA to be covered. What matters is where the work is done. However, there's always a however, if a worker is based in another state and does most of their work there, they may already be covered under that state's own Portable Long Service Leave scheme. In those cases, you as the employer can request an exemption from registering them in South Australia, but only if they're accruing long service leave under another state scheme. So the key there is to register workers for work done in South Australia and check for corresponding coverage elsewhere if that's their main location. Do we have to calculate and pay levies for previous 4 years as well? The answer is no. Levies only apply to service accrued from the 1st of October onwards. There's no requirement to calculate or pay levies for service before that date. However, it's important to remember that you're still responsible for any long service leave that was accrued under the State Act up to the 30th of September 2025, when an employee reaches an entitlement. We're getting through these nice and quick, actually. This question is about changes to working hours. What happens if a worker moves from full-time to part-time or vice versa? A worker will still receive 3 months of service for every quarter they work, at least one shift, even if that shift is a keeping in touch day, like I said earlier. So even if their hours change, their service credit stays the same. It's all or nothing for each quarter. Yes, like I said earlier, there is a however, and that is when it comes to claiming their long service leave, their payment will be based on their average weekly pay over the 3 years before the claim. So if a worker goes from full-time to part-time during those 3 years, their average pay might go down, likely will go down, and that's what affects the value of their leave. In short, hours worked don't affect the accrual of service, but they do affect the payment amount later on. That's all the questions that we had. I know Mandy said that there's a few that's come through earlier. So just let me finish up on a couple of slides and then we'll get to your questions, because I think we will have a few minutes up our sleeve to do so. Huh? Do you want to do it now?
Yeah.
Okay. Yep. Let's do that first.
Let's do that now. So we've got a couple questions about nurses. So just to clarify, nurses are delivering a service, but they're not covered under the SHADS award. So the nurses are not eligible. You do not need to register nurses. There's a lot of questions coming through about super. Portable long service leave authorities do not pay super to workers when they pay workers for long service leave. We can't provide you with any advice on what an employer's obligations are in relation to the worker, and we recommend that you seek further advice from a workplace lawyer or from your industry associations, because they'll be able to give you a better answer. What else do we have in here? What happens if somebody takes a pro rata payment and then they do start a new job in the sector within the next 12 months? Effectively nothing. The idea is that someone is intending to leave the sector when they claim their pro rata payment. Sometimes plans don't work out how you meant them to, and that's just a thing that happens. We're not going to stop people from working in the sector. If they need to come back, that is absolutely fine. If they're eligible, they will start accruing portable long service leave again. If someone claims a pro rata payment before they reach 120 months of service, which is your 10 years, and then they do come back to the sector, that person will need to accrue another 7 years of service before they're entitled to any further payments. So I guess that is the disadvantage to taking the pro rata payment between 7 and 10 years and then returning to the sector, is that you will have to get back to that 7 years again before you're entitled to another payment. If a person was to reach that 10 years of service, 120 months, and then leave the sector and take a payment, even if they did come back to the sector later, every 3 months of service that they accrue is going to be more leave that they're going to be able to take. So they'll get another 1.3 weeks of leave for every 12 months of service that they accrue, even though they'd already had a payout of it because they'd already passed 10 years the first time. Sorry, just scrolling through all the questions to make sure I'm not missing anything. Do we need consent from each employee to pass on the personal information? No, you don't. You are required to provide the information about your eligible workers under the Act. The Act does require you to do so to be able to register them. So no, you don't have to get consent from them. If you'd like to, you're welcome to, but you do not have to. Like we said, we won't be asking you for details like tax file numbers or bank details. those things will need to be provided by the workers when they make a claim themselves. Can you take long service leave at half pay? No, long service leave cannot be taken at half pay. The minimum period of leave is 1 week, which is 7 days, and then you'll need to take it in whole days after that. So there's another question there about single days. The answer to that is also no. When we pay a worker, it will be based on their ordinary weekly rate of pay over a 7-day period, calculated as an average of their pay over the last 3 years. So no half pay, but if somebody did want to take half pay, they could basically take a week of leave but take 2 weeks off work, which would effectively be the same thing. People who are delivering community services. So like we said before, if you're delivering community service, you have to be covered under the SHADS award or the ALRM award. Getting my tongue tied there. And also one of the services listed in Schedule 2, people supporting the provision, other people who are supporting those people who are delivering the service. There are no guidelines about how many levels up that goes. It's just if you are spending 50% or more of your time supporting the delivery of community services, then you are eligible. If you're spending less than 50% of your time supporting the delivery of community services, then the employer can register those workers voluntarily, but is not required to. If a person changes roles out of a community services sector role into another one, but stays with the same employer, their long service leave entitlements are then calculated under the Long Service Leave Act. So we call that the State Act here. Where a worker reaches an entitlement under the State Act with an employer, but that includes a period of service covered under portable long service leave and also under the State Act, the responsibility for paying that worker's long service leave is shared. So the worker isn't disadvantaged by moving in or out of the sector. There are provisions in that, and there will be heaps more information about how those work coming soon. NDIS planning managers, again, if they're covered under the SHADS award, they're included. If they are supporting the delivery of community services, so they're supporting people who are delivering them through your organisation, then they are covered. If not, then they are not covered. If you employ occupational therapists under SHADS, does that mean they are covered? Yes, it does. If they're covered under SHADS award and they're delivering a service, which occupational therapists will be doing, then yes, they are eligible.
I think that's the key thing is the SHADS award. So we said earlier on a slide about occupational therapists and that type of health profession. More likely than not, they're not employed under the SHADS award. But if they are, then they would be eligible.
Yeah, there are crossovers between different awards depending on the industry that your business operates in. And so if they are falling under the SHADS award, you do need to register them. And that's what Aaron said before with employment services. If you're covering under the labour market award, then you won't need to register them. If you're covering under the SHADS award, then you will. I think I might have got most of the questions now.
I can't see who the questions or if anyone's asking questions. So,
the other one, if you're employing your workers under an agreement and that agreement is underpinned by the SHADS award, then they are covered by the SHADS award. So it's not about how you paid them; it's about what they're covered by. Let's go.
Done?
Yeah,
all right.
I think if you do have any more questions, feel free to send them through and we'll get back to you. But I think, oh, hang on, one more. Does it mean employers are not required to pay out long service leave upon termination? Yes, it does. If the person is registered with portable long service leave on termination, you will not pay out long service leave to that worker on termination. If the person is leaving the sector, they'll apply to ask for a payment. If they're not leaving the sector, then the service they've accrued will continue on with them into their next role.
I guess that's where the portability comes into it. If they are terminated and they get a job within the sector with someone else, their long service leave will continue to be accrued under that new employer.
Okay, I think that's all the questions.
All right, I think we've got all the questions. We can't see all the screens on our laptops, unfortunately. So, if you're wanting to ask a question and we can't see it, well, I apologise. Maybe you can chuck something into the chat and Mandy can see it. Otherwise, the slide that you can see on your screens now are just some of the key dates that I know most of you would be aware of, but I just want to make sure that everyone has this information. When we talk about the 1st of October, we talk about 1st of October 2025, which I think someone mentioned to me yesterday is only 12 weeks away, which sounds a bit scary, but it probably isn't, because we've been out there talking to a lot of you already, and we've still got a lot of work to do in that space as well. So 1st of October, scheme starts. That's at that point in time, you'll have the first month to register your business, the employers. Between the 1st of October and the 31st of December, which we're calling the first quarter report or the first reporting quarter, that's when we'll need you to complete your worker registrations for each eligible worker. Then come the 21st of January in 2026, which is 3 weeks after the first quarter reporting period is finished, is when your quarterly report is due and your levy payment for each employer, each eligible employee, is due. On our website, we do state the periods of each quarter, and we do also highlight the date that each of those quarterly reports, when their reports are due and when the payments are due. They're on our website. They're easily found. I'll make sure that if anyone asks any questions about that, we'll share that with you, but it's fairly accessible. What's next? We're busily working here in the background, pulling together a whole lot of information and help and guides and employer toolkits for all the employers at this point in time. Those resources will be coming very soon. Likely they're going to come out in packages. For the first package will include, I guess, information around the scheme and some of the early work that you'll need to be doing. But what I would recommend is, if you want to receive some updates around where we're going with that, join our mailing list.
Hi, Mike.
This way to join our mailing list.
Hello.
Send an email to admin at SAPLSL-community.org.au, and our team who monitors that email will add you to the list. We will have more webinars. We are planning on a webinar based on the understanding of the regulations. A date to be confirmed. We don't know what that date is at this point in time, but we would hope that that would be in the next 4 weeks. Eligibility webinar. I alluded to another webinar around the portal about how you use it. There'll be plenty of opportunities for you to understand exactly what is needed of you and your workers. Our website is on your page right now. The link to that is on your screens. Feel free to jump on, have a poke around. There is a bunch of information on there and resources around workers and employers. There's FAQs. This is where we put our webinar recordings. And I would recommend you bookmark that website to stay in touch with exactly what's going on.
While you're pausing, we did have a question about whether we're going to communicate with employees, and the answer is absolutely yes. Whilst at the moment we are primarily focused on the employers, that's just because you are the ones who need to do all the work. Basically, you'll be needing to register and choose who you need to register and get all of the portals set up. But that doesn't make the employees any less important. We'll absolutely be letting them know all of the eligibility requirements, making sure that everybody knows how it works, what they're entitled to, how the payments are calculated. All of that is coming as the next phase of the implementation of the scheme.
Thanks, Mandy. That's about it. That's all we really had for you today. Again, if I go back to our introduction, it was primarily about going through all of the questions that we've been getting, some of the common themes that we've been hearing, and sharing them more broadly with you. I'm 100% confident there are more questions out there and more, I guess, scenarios that are directly impacted by your circumstance. Feel free to reach out to us. There is like I said, a stay in touch register contact list that you can register for. You can send our admin team an email. You can give me a call. My email is on my signature list on my emails, but not next week. That we do have people who will answer the phone if you ring. There is a free call number and a standard landline number. There's plenty of opportunities, I guess, for you to get in touch. Like Mandy just said, our whole point around focusing on the employers at this point in time is you're going to need to be doing a lot of the work up front, especially preparing for the scheme starting on the 1st of October and in that first reporting period. So we will get to the employees and the workers, but our focus right now is making sure that you've got all the information that you need to be able to make the 1st of October a success for you and as easy and as quickly and seamless as possible. If you do want us to come out and see you and have a chat to you, please let me know. Mandy and I, or I by myself, I'm more than happy to come and have a chat to you. Just let me know and we'll try and find a time in our calendar. And I think that's about all. Was there any last questions that had come through?
If we haven't answered your question today, we absolutely will get back to you. I've got a log of everything that everybody's asked. The worker self-registers, how the board going to manage this? If the worker self-registers, they'll be able to nominate that the employer is their employer, and then the employer will have to approve that. So yes, they'll have a account on the system, but they won't be accruing any service until you have agreed that they are an eligible worker and it's been added to your account that way. So you'll always know which employees are registered with you. That will always be visible in the portal, and you will have to approve that to happen. It can't just happen by itself. Yeah, I don't know. There's a lot of things. I think I've got most of them.
Yep. Okay, like Mandy said, if we haven't got to your question, we'll definitely come back to you directly with an answer, or maybe even agree or come and have a chat to you about it. There are going to be plenty of employers that we haven't been able to reach as yet. But I guess our focus, like I said earlier, is to try and reach as many as possible. So I'll close out by saying thank you for joining us today. I know this is our second webinar and we'll have more webinars to come. So I appreciate your time, and I'll sign out and say stay safe, and I'll see you next time. Thank you, everyone.